Hey everyone, we have another investor basic call, and on this call, I'll be going over the basics of Tykr, how I get the most out of the platform. So you guys will see a few pro tips to save you time. If you're completely new to investing, this will give you a great place to start. And if you have been investing for a while, this will help you save a lot of time, especially if you're trying to narrow down a few strong stock picks. So I'll go ahead and share my screen, and we can dive into Tykr. All right, so when you join Tykr, the first thing you're going to see is the checklist. This is after you get through that onboarding, which takes about 60 seconds or less. And this is really important because we did some surveys asking people, hey, who is able to confidently buy stocks within their first 30 days after completing the onboarding or completing the checklist here? And it's over 90%. So that's really important. It's like if you can get through this, this is the best place to start because after this, you're off and running. So the first step, actually, the first two steps are actually done. It's join the web app or the mobile app, no matter what plan you're on with Tykr. You can use both platforms. I tend to use both actually, web app and mobile app. As you go through the onboarding, you probably created your first watch list. That's important. That's my favorite feature in Tykr. I'll go here actually to the watch list. My main watch list, that is, you can create a whole bunch. But when things change, especially that summary, score, and margin of safety, you automatically get notified. So a good example of this was in 2023. I was holding AMD, and at the time, AMD flipped from on sale or watch to overpriced. And at that point, I got a notification because it was on my watch list, and I sold for a profit and moved my gains and my shares, or all the money I had with AMD, and I moved that over to NVIDIA. All right, so jumping back to the checklist, we'll continue going through. Then you get to the education modules. That's really step three. Those are found on the mobile app for iOS or Android. We will soon add them to the web app, but right now you can find those in the mobile app. Kind of inspired by Duolingo. If you ever use Duolingo for language learning, we try to create some simple modules that really help you get up to speed. Now, that same information is found on Tykr.com. This is our blog, the investing tips, and you get a new tip every single day. Now, if you'd like, you can just skip those emails and you can just come here and you can read them all in one go. But the key things, like, is Tykr used for investing or trading? It is investing. Wealth building versus wealth protection. That's important to know. The difference between stocks, ETFs, index funds, and mutual funds, which is best. So a lot of good tips as you go through. Again, you can read them here, you can read them in the educational modules, but that's critical to really help you go from a beginner, if you're new to the platform, to somebody who's, pretty much armed and dangerous and ready to generate some really good results in the stock market. Tykr is very powerful. I'm biased, but a lot of our investors, especially on Trustpilot, have said the same thing. All right, then jumping over to sign up for a broker. Good news here. We will soon have broker connections, hopefully coming, if not here in April, hopefully in May. We're pretty close, but this leads to the portfolios, and I'll show you real quick. I'll go a bunch of test portfolios I have here. You can create portfolios. You can track your progress, your returns. This is one I was playing around with currencies within Europe. But anyway, you can go to projections, see if you're on track to hit your retirement goals or not. So this is really important. Now, right now, you can update your portfolio tracker manually or with a CSV. In other words, or in my case, I use Schwab. So for example, I could export a CSV from Schwab and import to here. The broker connection feature, again, coming very soon, will automate that. So you don't have to do any manual work. It's just automatic connection and you're off and running. So that's critical. I want to just show you real quick, if you're interested, go to the footer of Tykr.com, go to broker connections, and you can see if your broker is on the list. So let's kind of skim through here. I'll just go slowly so you can kind of see. Fidelity is a big one. Interactive Brokers is probably the largest global footprint. If you're not sure what broker to go with, that's usually a pretty good option. Moomoo, you can see some of the countries that's located in. Robinhood. A lot of people in the States use Robinhood. TD Ameritrade, which was acquired by Schwab. I use Schwab. Here you go. Schwab right here, all the way down to the bottom. Vanguard, Wealthsimple, Webull. Webull has a lot of customers, and I know a lot of customers around the world. And Zerodha is really big in India. But anyway, let's circle back to Tykr. Next up, you've got your broker connected, or you've selected it. In my case, I've got Schwab. You create your first portfolio, and then the last step is really setting alerts. And speaking of alerts, let's go ahead, go to Tools, go to Alerts. You can set alerts on anything from stocks, ETFs, crypto, events. Here's what that looks like. You can select a date. Let's say you know there's an earnings report on, we'll just pick a hypothetical date, let's say May 8th. For a stock you like, you could set it here. So you get an email notification when that happens saying, hey, heads up, here's the event date. And then there's news alerts related to stocks you like. For example, one stock I invest in is Palantir. If I want to get, hey, what's the latest and greatest news update on this stock? I'll set that alert. So really handy. I haven't found an alert feature on any other platform out there. So I really like this. And a few customers provided feedback just to fine tune it. All right, so that's the best place to start. Now, jumping back to the education here, I got to touch on what are the most common questions our customers ask, or really most people ask in the stock market. It's really three questions. Where do I start, which we went over? When do I buy? When do I sell? So let's go ahead down to the articles here, when to buy and when to sell. We'll look over the article briefly, and then I'll show you in Tykr what you're looking for. So when to buy is a two-step process. When a stock is on sale or changes to on sale. That's another nice thing about the watch list feature. If let's say you're looking at a stock that is, currently overpriced or watch and it flips to on sale, that's a good sign. That tells us the financials are improving. And then another key point here is the 4M score is 80 or higher. We're going to take a look at Tykr right now. What do all these ratings mean? So let's go here. I'm going to go to dashboard. And you guys, if you haven't done this before, you can set up your widgets here however you like. You can rearrange them. I like to see top search stocks, top gainers, top losers right away. Also top summary changes, top score changes. I can see what's happening. But what's handy is you can click these little arrows and expand this full screen. Let's see what people are looking at over the last 24 hours. Okay, of course, a lot of Palantir, a lot of NVIDIA, Learn. Yeah, let's go here to Learn. We'll break down these numbers here, these metrics. So the first thing we want to look for is that summary stocks and Tykr are either on sale, watch, or overpriced. In order to get to on sale, you need a score of 50 or higher and a margin of safety of 50 or higher. So the score here, this is overall financial strength of a stock. The higher the score, the stronger the stock it is. In most cases, it's a safer investment. And then over here, the margin of safety is higher margin of safety, excuse me, higher margin of safety, the higher potential returns you can make. And again, getting 50 or higher on both is the goal, and only about 15% of stocks in the market make it on sale. This is very rigorous. It's very hard to achieve. Now, if you have one of these metrics at 50 or higher, then it's watch. And if both are below 50, then it's overpriced. And that's where most stocks sit. And this is what we do set expectations with people that when you invest in an index fund, ETF, or mutual fund, yes, that's more wealth protection mode, not wealth building. Wealth building is when you invest in stocks. But wealth protection is, you're nearing financial independence or retirement. You want to be a little safer, and that way go into funds. Most funds, just telling you right now, are consisted of or do consist of overpriced stocks. So just keep that in mind. You're not going to get those bigger returns. All right, so you get those through those three steps. Then you come to the middle to really wrap things up. We'll go a step further here with a 7. But anyway, the 4M is, it looks at more than just the financials of the stock. It also looks at the meaning, which is the business model, and how scalable the revenue streams are. We like revenue streams that can increase much faster than liabilities. The biggest liability in business is typically payroll. If you have a business where you increase your revenues, but your payroll increases just as fast, that's not scalable. You want those high profit margin businesses. So we look at meaning, and we look at the moat, which is how business compares to other businesses in the same sector and industry. It's kind of like a competitive comparison. And then you have the management, which is the track record of the CEO. Doing homework on these three, the meaning, moat, and management, it can take you hours, if not days, of research. We reduce it down to seconds with the 4M tool. You can go through this experience, and we're not going to go through it right now, but you can also just log in and see these scores right there. And it's crowdsourced. What that means is every time you go through, there's a different score produced because it looks at different companies, that moat section, and then it lets you know who got what score. So I see here Joe got a 91, John Owens got an 88. You can kind of go down the list and see those scores. There I am, 92. A while back, that was back in February. So, all right. Um, let's keep going here. So those are the first things to look at and tying back to when to buy. So it's on sale stock and over 80 on that 4M. Now, before we go any further, of course, anything I show you is not financial advice, only buy and sell stocks that align with your own personal financial goals. So that's when to buy. Let's go back here to when to sell. This is not a two-step process, it's a three-step process. So it's when your stock changes from on sale to watch overpriced. So it's moving in the wrong direction. That 4M score drops to 59 or lower. That's a pretty risky business. Let's go back here to the 4M tool. You'll see we know what we're looking at. Margin of safety, meaning moat management. But if you go to the next screen, you can see the scores. So 80 to 100 is a high score, 60 to 79 is moderate, and 0 to 59 is low. So we know what we're looking for there. So a stock flips too overpriced, and that 4M drops to 59 or lower. And this last point is really, really important, which is a quote from Warren Buffett, which is rule one, don't lose money. Rule two, do not forget rule one. What that means is you do not sell for a loss. You train a habit of always selling for a profit. In my case, I made the choice years ago. I do not sell stocks for a loss. I do not lose money in the stock market. If the market goes down like it is because of the tariff wars, that's fine. I know the market's going to correct and it's going to lift everything back up, and I will sell my stocks for profit that are not performing as well. Take those gains, move them over to something else that has better returns. Kind of like what I did with AMD uh, about a year and a half ago, actually. All right, let's go back to Tykr. So we know when to buy, when to sell. Those are the critical 2 points to look for. Now let's go a little step further. I'll show you a newer feature as of 2025 called the 7. And what it does is it kind of rolls everything up and puts a bow on it, is how I phrase it. Really makes it easy to put everything on one nice screen. So you got the summary, you've got the score, you've got the margin of safety, and you have the 4M. All right there. We're checking those boxes on this particular stock. Now it goes a step further to give a little more confidence. 5-year returns over 80%, we can see here are 520. That's really good. We like stocks that consistently beat the market, not just 1 year, but over 5 years. And the S&P 500 typically returns about 80% over 5 years. So we can see here this stock has returned 520. That's great. Next up, and these are two key details to pay attention to if you're newer to investing. These two items are what drives share prices up and down the most at those earnings reports. So every quarter you have your earnings reports, you have a 10K, excuse me, 10K, which is the report, that's the annual report. Then you have a 10Q, Q for quarter, that's your quarterly report. And that really rolls up all the financials of the business, what have been accomplished, and when stocks can see an increasing EPS, meaning an increase in profits, and it's beating the earnings estimate. Those are really good signs in most cases. Not all cases, but most cases, the share price goes up. However, if it misses on both, in most cases, the share price can go down. So let's inspect this a little bit. We know EPS is not increasing, so let's go to financials, EPS, and there we go. We want to see 3/4 where it's increasing. We can see here it's two, going from 95 cents up to 224. That's great, but not three. So we're not getting a point there on the seven. And then earnings calendar, let's have a closer look. Yeah, this is looking good. You can see every quarter there are analysts that put together an estimate, and this is the average of those estimates. And then you have the report, and you like businesses that come in reported higher. All right, so looking really good here. Look at that, 327. That's quite impressive. Go back in time. Last time they missed looks like 2022. So going back to the seven, you don't have to use this screen, but it's just another layer of confidence to put everything together and then go a step further with the returns, the EPS, and the earnings. In my case, I found myself over the years looking at these seven steps, and the goal is if you can get a 5 out of 7, five, five or higher, that's really, really hard to do. And to show you guys something here, and then I'm going to kind of open it up to questions. On the stocks page, you can filter by whatever you really want. And what you can do is you can go to personalize. You can turn on and off columns, and then you can rearrange the order. So in my case, I like to see the company, the summary, the score. You can drag them up and down like so. Margin of safety, 4M, the 7 5-year returns. I kind of like to see everything right there. Sometimes I'll put the share price here or put market cap classification up top. I'll leave it right there. Let's hit apply. And we can see here today we've got 57,000 stocks in the markets that are flowing through Tykr. This number changes every day because there are stocks always going public and stocks going back to private. All right, so looking at this, let's go to the 7. You guys will see this number change. Let's just do 5 to 7 and see what we get. So that number moves to about 1,200. Tells you it's very hard to get to a 5 out of 7. So you got 5, 6s, and 7s, but now let's change it to 7 out of 7. See what happens. All right, so that moved to 31. Very difficult to get to all 7, but in this case, you can find some stocks that could potentially be some hidden gems. And of course, you see NVIDIA on that list. There's a few in here that I actually do not recognize, but yeah, impressive all around business and very hard to get to this level. All right, I'm going to pause there. See if you guys have any questions. If not, I'm going to refer to the onboarding here and kind of drill into some of these articles. Right? Don't be shy. Any questions come up? I'm going to help answer. Anything about the markets? And we're also going to save some time here to look at some stocks you may be interested in. Those are always fun. All right. While I'm waiting for anybody to come through, let's take a look at this article here, wealth building versus wealth protection. Now, when people are jumping into the market, and let's say you're in your 20s, your 30s, 40s, sometimes 50s, and you don't have enough saved. However, you're going all in on ETFs, index funds, or mutual funds. You really got the wrong tool for the job. The thing is, funds typically are going to get about 6% per year, 8%, maybe 10% on average. I know the S&P 500 over the last 10 years has averaged about 10%, maybe a little more. And that's fine. However, it is much more effective to do what Warren Buffett did. Warren Buffett built his first million by investing in about 10 stocks, private companies. His first business was a private investment company, so not investing in public companies, but private companies. And 10 stocks or less, he made his first million that way. You want to be focused. As you build more wealth and you have more funds in your account, in that case, then it's time to diversify. And Warren Buffett, Berkshire Hathaway has around 40 stocks today, give or take. Some of them are private companies, some are public. It gives you good context that if you're in wealth building mode, focus on stocks, wealth protection mode, then transition to index funds, ETFs, and mutual funds. In my case, I tend to gravitate towards dividend stocks. I don't dividend invest because value investing, which is what Tykr is all about, generates significantly higher returns than dividend investing. But it's nice. You look out 5, 10, 15, 20 years and you have dividend stocks, you are simply paid a dividend every quarter just for holding those stocks. And if you have a lot of shares of a particular stock, that way you don't have to sell shares to like pay for hobbies and travel and do whatever you want. You can simply just keep your stocks where they're at, stay put, pay yourself the dividend, enjoy life. But yeah, that's a quick overview of wealth building versus wealth protection. All right, let's go back here. Difference between stocks, ETFs, index funds, and mutual funds. This is a longer article, but I'll kind of summarize this. Stocks, no expense ratio. What that means is you holding a stock, for example, I hold Apple in my portfolio. I am not being charged an expense ratio to simply hold that stock. It is free. That's nice. Now, ETFs, index funds, and mutual funds have an expense ratio because they have people who are building those funds. They're assembling the stocks, they're adding to it, they're removing from, they're really managing it. That money, the expense ratio is paid to them. And you can see your ETFs have a 0.1%. Index funds have about a 0.1%, give or take. Some can be a little higher, some a little lower, but it's pretty low. So here's an example, real dollars. You have 10,000 shares of index fund ABC. You're going to pay $10 a year just to hold it. Now, mutual funds, that's a different story. Expense ratios can be 0.5%, not 0.1, 0.5%, up to 2.5%. A lot more expensive for very similar returns. So keep that in mind. Mutual funds, you're going to get about the same returns, but you're paying a lot more for it. And those expenses erode into your returns over time. That's why I tell people if you're going to make the choice between funds, I like to go with index funds or ETFs as opposed to mutual funds. Really important to know. Now, what's the difference between an index fund and an ETF? The main difference is in ETF, you can buy the shares, let's say middle of the day, the share price of an ETF is like $100. You buy it at that exact price intraday. Index funds, you can buy it at 1 p.m., but you don't get the price at 1 p.m. You have to wait to end of day. That's when you get the price. At the end of the day, does it really matter? The answer is no, because these funds are all focused on long-term investing. So yeah, that's a quick overview of the differences. Like I said, I do prefer stocks. If you're wealth building, wealth protection, you have ETFs, index funds, and mutual funds. Of those three, I do prefer ETFs or index funds. And now, fortunately, if you go to Tykr, you see the asset classes here. We got stocks, ETFs, and crypto. ETFs, we have I think about 1,500. Oh, 1,000. Okay, somebody must have pulled a few out. But anyway, we will add a new data provider. The goal is this summer of 2025, and we should be pulling in most ETFs from around the globe, which could be a little over 8,000. Somewhere, I should say, around 8,000, if not more. I'm very excited for that. I know a lot of customers are as well. All right, let's keep going here. Another article to touch on. We touched on the summary, the score, the margin of safety, and the 4Ms. How to not lose money in the market. That's the rule one investing. Rule one, don't lose money. Rule two, don't forget rule one. We've got the 7 4 investment strategies. Yeah, let's touch on this one here. So there are really 4 investment strategies in the market, main strategies, I should say. You have value investing, that's what Tykr does. You have growth stock investing, which is you'll find stocks that in Tykr that the margin of safety might not be the strongest. However, that meaning, moat, and management of those 4Ms, they can be strong. So in other words, the financials aren't keeping up with the rest of the business model. Those are growth stocks. Now, a lot of them can be, excuse me, overpriced or watch in Tykr. But it doesn't mean they're a horrible business. So try to do that 4M analysis. Thankfully, it's powered by OpenAI, so it can save you time. But that'll really roll up that score. And if it's let's say it's an overpriced stock, but still has a 4M that's, let's say, closer to 80, that can be a good place to be. Speculative stocks, this is where most people fall in the traps. Most people hear something on social media, whether it's X or Reddit or maybe a comment on YouTube. Somebody will say, hey, you need to go buy the stock, and then they go buy the stock. In most cases, those stocks are speculative. If you go to Tykr here, let's go back to that filter. We're going to go to summary. Let's go to overpriced. So we go from 57,000 down to 36,000. That's a lot of stocks that are overpriced in the market. Again, a lot of funds contain these stocks. Weaker financials, they're not going to give you the best returns. When I was really at a frustrating point with my investing journey, which was between 2010 and 15, I was really keeping up with the market at best, and I knew that Warren Buffett and Charlie Munger, the late Charlie Munger, they're able to consistently beat the markets, and I knew they were not gambling men or using feelings or emotions, which means they started with math. So that's what really started this journey. I needed to figure out what are they doing, and fortunately, I did through a lot of reading and a lot of trial and error used that Excel sheet from 2015 and 16. I kind of iterated on it, but used it through 2019, making returns between 15 and 50% per year consistently without a lot of effort. It was actually, and I'm still maintaining those returns. Now, I do tell people in the education that's what we aim for. I can't guarantee that, of course, but we do aim for those returns. And you simply want to look for those on sale stocks. They have those stronger financials and they tend to perform better in the market. But again, they're only a small percentage. In fact, let's go here. Let's go to on sale. We'll get our exact percentage today, 57. So 4900 divided by 57 gets you about 8.5%. As of today, 8.5% of the stocks in the markets are on sale. That shows you it's very, very difficult to get to. All right, let's go back here. I'm turning to my window over on the left. And if we don't have anything, I want to hit one more article. And then we're going to dive into a few stocks. You can see how I look at stocks. We'll use the seven. So, how many stocks should you own? This goes back to a tie back to wealth building and wealth protection. So, if you're in wealth building, of course, you want to be 10 to 30 stocks, is what Ben Graham said. We do recommend at Tykr about 10 to 15 stocks. Charlie Munger had a comment here, diversification can make sense for individuals who are just trying to hit the market average. So keep that in mind. If you're diversifying, which is the overstated comment by so many publications and advisors out there, is diversify, diversify, diversify. It doesn't make sense, especially if you want to build your wealth. Most people that are coming into the market, they want to build their wealth. They're looking for a way to put themselves back on track. A really heavy statistic here is, get this, a few statistics I'll give you. Over 50% of Americans are behind on their investment. They're not going to retire by the age they want to retire, over 50%. And 20% of Americans do not have anything saved in investments. So, how do you make up for that? Well, your option is you can go get a second, third job, you work yourself to death, or you can simply make your money work harder for you. And that's what we're all about at Tykr, is let's put that money away, get that working harder for you. That's where we focus on wealth building mode. Those on sale stocks with a high 4M, they're getting the bigger returns. Wealth protection, of course, that's you're close to retirement, you're close to financial independence, and you can start making that transition to funds, index funds, ETFs. Again, if you love mutual funds, so be it, but keep in mind the expense ratio is higher. All right, jumping back to, let's go to Tykr, and I want to go to the dashboard. We're going to kind of put all this together and take a look at a few stocks. So we have the top searched stock here. It looks like Learn. Good for you, Learn. You beat out NVIDIA and and then Palantir, which tend to be top of the list almost every day. Here's one, Uber. Yeah, let's take a look at Uber. It's been a while since I looked at this business. So we're going to walk through the seven. And what I want to do is I'm going to create a watch list with today's date. Show you guys what I do here. 4/15, 25. And we're going to look at Uber. So going through the seven, we're going to do this manual, and then we're going to look at the seven tab on the next view just because it's such a huge time saver. All right, so on sale stock, that's looking really good. This is impressive. This stock has been not the best investment for years. So it looked like it flipped on sale. If you guys take a look at this, looks like March of 24. Very interesting. All right, so we're on sale 74, so we're over 50. That's great. 80% in the on the margin of safety. This is driven by that EPS. Profits, are they increasing? We're going to take a look at that in a second. In the middle, we're flirting with that 80. We got a 79 as the average so far. That's really good. We're not going to get a point on the seven, but we're pretty close. Down below, 163. So the market is returning about 80% over 5 years. So that's doubling the market. That's pretty good. Let's keep going here. Financials tab. Revenue, nice steady increase. That's looking good. Net income. Wow, look at those profits. That's incredible. Look at that, 3 quarters in a row. So we're going to get a point there. And then the earnings calendar, beating those estimates. That is outstanding. I'm impressed. Uber has really turned the corner. I'm going to make sure this is added to this watch list. Oh, it's already there. Perfect. Okay. So if we go to the seven, I think we're going to get a six. 6 out of 7. There you go. So that's one stock that's on the list. And of course, only buy and sell stocks that align with your own personal financial goals. So I'm going to make my list here. We'll kind of roll these up. All right, next up, let's go to dashboard. See if we can find another. A lot of the usual suspects I'm always looking at. I hold Microsoft, I hold Apple, I hold Nvidia, Palantir. Let's keep going here. I looked at Chipotle in the last video. I was really impressed with their financials. Really impressed. It's hard for a restaurant to make big profit margins. They're doing great. All right, Duolingo I've looked at before, SoFi. Let's keep going. Let's go deeper into the weeds here. Take a look at. Let's go to Netflix. It's a fun one. If you guys have any you want to speak to, please leave a comment. I'm happy to have a look. Otherwise, I'm going to keep going to that most top search stocks. So let's close this left navigation and dive in. So this stock is a watch, and we can see that because the 66 is greater than 50, but the margin of safety is only 2%. Tells us that the EPS is not increasing. In other words, the profits are not. 75 on the 4M. So that's pretty good. This is kind of like a growth stock. It doesn't have the financials could be a little better, could be I'm sorry, an on sale stock, but the other items are really looking good, that meaning moat and management. Down below, we can see 125%. And it doesn't look like, if we take a look here, it was 1,000 down to 930, well, 870. So 10 to 15% down. I have seen stocks that are down because of the tariff negotiations down like 20, 30, 40%. So this is not getting hit as bad. That's good. Now, it does not really, we're not dealing with a manufacturer of semiconductor chips. That's where the biggest hit has occurred. But a digital company, highly scalable business, more and more countries are starting to use Netflix as a streaming provider. All right, let's go to the financials tab. Take a look at that EPS. Yeah, that's what we're seeing here is declining profits. That's why we don't have the big 80% or greater margin of safety. Um, we were for a while seeing a nice increase. Look at these 3 quarters. That's picture perfect. That's what you want. But yeah, kind of leveled off and then fell from 5.52 down to 4.37. All right, one more tab, earnings calendar, beating those estimates. That's great. So I think we're going to get about a maybe a 4 or 5 on the 7. Let's see, only a 3. Wow. Okay. So in my case, this is like that confidence boost. If am I going to go into Netflix right now? Probably not, but I'm going to put it on my watch list. Let's add it to the 415. So that's 2 on the list, and we're going to rank order these based on strongest to weakest in a little bit. I don't see any comments quite yet in the chat window. That's okay. We'll keep going. I want to go to dashboard. You can find some, depending on what widgets you create, you can find some interesting winners. Like here's one, top summary changes. Let's blow this up. We have the previous and then we have the summary today. So look at this. We've got stocks transitioning from watch to on sale. That's a good sign. All right, Tech Point. I don't know who this is. Let's keep going here. I want to see if there's any names I recognize. Israeli Group, don't know them. Let's go to one more tab, see what we get. Tel Aviv Stock Exchange. Interesting. That's a public company. All right, let's take a look. And we'll walk through the 7. So we got on sale stock, 72, 80% on that margin of safety. That's probably huge uh, profits on this business. Let's keep going here. Share price is low, $12. It's flirting with territory that can be a bit dangerous. Just for context here, and there are articles in Tykr that talk to this, like penny stocks and IPO stocks. But this stock is kind of flirting with penny stock territory. Really important to keep this in mind. If you find a stock in USD currency and we try to convert this to an appropriate price in other currencies around the globe, but US dollar currency, $5 or less, there's a 99.9% chance a stock will never break out past $5. The reason is large institutions, they lose interest and they lose confidence and they don't touch it. And that's why stocks that usually fall less than $5, they stick. They'll stick there forever. Some people will say, hey, I'm going to invest in this 30-cent stock and watch it go to 30 bucks in a few years. The chances of that happening are slim to none. Very, very rare. Now, any stock between $5 and $10, there's a 90% chance we'll never break out past 10. So, same situation. Institutions lose confidence and they lose interest. So keep that in mind. I tell people try to wait for a stock, especially if it's an IPO stock, which typically goes public in those lower dollar ranges. We want to wait for it to push above 10. Let institutions put their money in first before you put your money in. Let them take the risk. Get that stock above 10 and then, okay. How does it look? Is it on sale? Strong score, strong margin of safety. Then take it from there. I would do a 4M as well, just double check. But Tel Aviv, let's keep going here. And then we got a request. Um, BYD. Oh, yeah. The big EV player around the world. We'll get to that in a second. Um, Going down to the returns, 284, so beating the market by a long shot. That's great. Let's go to financials, earnings per share. Yeah, looking really good here. We had a big spike, it looked like over $1. Went from 25 cents up to $1.07 and then back down to 26 cents. But in general, the year over year, let's go back here, yearly. Yeah, the year over year is looking really good. Yeah, moving in the right direction in general. Let's go to earnings. All right, so I see they had a miss back in November 24, and then they did beat it again. So it's kind of waffling between beating and missing expectations. We're probably going to be at about, let's go to the 7. I bet a 4. A 4. Yep. So not hitting the minimum. Sorry here. A little under the weather over the last 24 hours. Um, a 4 out of 7. We're not at that 5 or higher that we'd like to see, but still This is another one, and we're going to add to the list. I'm going to rank order these in a little bit. All right, it's added. Let's go to BYD. Want to make sure I get the right. Yeah, we got pink sheets, multiple exchanges it is sitting on. I want to see which BYD ticker we want to look at. Um, all right, so BYDDY is the one we want. BY. Interesting. Okay, so let's dive in here. Wow, I'm seeing some really impressive numbers right off the bat. All right, so on sale stock, 68 on the score. Overall financials are pretty good. 80%. This tells us yeah, that EPS is definitely increasing. You get down here, $98 is a share price. Look at this. They were at $10. They're up 800% over the last 5 years. Wow. Let's just take a quick look. I'm curious here. I need a refresher on Tesla. As long as we're in the EV world, we can take a look. Okay, so 400%. But BYD is taking a lot of market share as we speak away from Tesla. Let's keep going here. So this is looking good. The 4M could be a bit higher. We're at 73. So it's in that in-between range between 59 or lower is that's a no-go zone. 80 or higher, that's a really strong stock. All right, let's go to financials. Wow, look at the revenues here. This is a really nice story to see. Just keeps climbing. Wow. All right, there we go. Net income. Look at that. And net income, so you guys know, and EPS are very similar. The difference is the number of outstanding shares. So EPS is just net income divided by outstanding shares. So we can see here big improvements there. We're going to get a point here, the stock, and then or the seven, I should say, and then beating those estimates. This is really good. Had three misses in a row. Looks like between uh, it was April of 23 through October 23. Okay. But really making good progress there. Let's go to the seven. 5 out of 7. Looking really good. I want to pause here. Let's take a look at. I remember this a year ago. I was looking at, I think it was Auto Trader or some site was talking about the top 10 selling EVs in the world. BYD had five of the top 10, whereas Tesla only had two. I think the ID4 was in there from Volkswagen, but as like BYD is really crushing it. So let's go here. Top selling um, the sales numbers. Yeah, Devin over here is mentioning BYD's sales of BYD's top selling EVs around the world 2025. Let's see what we get. All right. This is probably the site I recognize. Yeah, US News, cars.us news. So where is my list? Go here. Tesla Model Y. Interesting. 405,000 units sold. Model 3. Is this just US? Mustang Mach-E. Let's go back here. I might have the wrong. Yeah, this was a global site. I've got the wrong location. I want to find top selling EVs vehicles in the world. There we go. Okay, so we've got BYD Song, the Seagull, the Quinn Plus. So they got three spots. Tesla has two. Interesting. Okay. But I think that number is changing because we're at the month of April now. This was January. But I know China is able to manufacture these companies at extremely low costs. I know Tesla, as we've seen over the last few years, is decreasing the prices, and that's been impacting their profit margins. In fact, as long as we're on this road, we've got BYD. I'm going to add to the list here. Let's run through Tesla, give a nice comparison here. So we know we're at a 5 out of 7 on BYD. Tesla, we're at a watch. 51 on the score, so just over that 50 mark we're aiming for. But this is the issue, and I warned people a few years back, is BYD and Volkswagen taking more market share. And then, of course, we're seeing uh, Toyota has talked about the solid state. They're taking the lead on the solid state batteries, which will have somewhere between 700 and 1,000 mile range with about a 10-minute charge time. Of course, when they first come out, it'll be optimized more for 700 miles, give or take, but then the goal is eventually hit 1,000. That's crazy. And Tesla has talked about they're not going to adopt the solid state batteries. But that could be a game changer. And I'm like, gosh, with all the threats coming at Tesla from every different direction, I'd be a little afraid if I were a Tesla investor. So if I did invest, I would have probably sold out a year or two ago. But anyway, let's keep going. In the middle, at 78, financials may not be the best, but does tell us the meaning, moat, and management are still fairly strong. I'd put more weight on the meaning because they do have the other revenue streams. Like, for example, let's go to Tesla's site. And I like going to the top here. You can see, of course, their vehicles, but they've got the solar panels, solar roofs, power cells, charging stations, which only make up, last time I checked, about 10% of revenue. So I do appreciate that about Tesla's multiple revenue streams. We like, for example, one of my favorite stocks in my portfolio is Microsoft. It's not my top performing stock, but to me, it's a safe play because they've got Microsoft Office, they've got Windows operating system, they own LinkedIn, they own Xbox, the huge investment in OpenAI, um, Dynamics 365, which is a big ERP system that's enterprise software. But anyway, they generate so many revenue streams. It's a nice, safe business. If one revenue stream slows down, the others can make up for it. And it just makes for a safer investment. But let's keep going through the seven. We see here the rating 400% versus the BYD 800. Go back here. Yeah, 807. Let's go to the financials. This is a little frustrating if I were an investor at Tesla. Is you see those revenues flat. I get it, like seeing a decline of profits, your net income and EPS is one thing, but this, gosh, I if I saw like 3/4 of flat revenue, I'd be okay, what's going on here? But then you go, 4/4, 5/4, six, seven, eight, nine, 9/4, pretty flat. That's rough. Let's go to net income. Yeah, we had a big spike. EPS is actually, we'll take a look at that. So we're seeing a slow increase here, but do you see that drop off back in time, back in 22? Higher prices for the cars, and they've dropped those prices consistently. Yeah, that's a tough place to be as an investor to see those profits decreasing. And then the misses. That's another issue too. Consistent misses here. Wow. So this stock, I'm gonna guess, I think we're at a two or three. We're at a three. Tesla, yeah. So if you put those two head to head, Tesla versus BYD, if I invested in EVs, I'd be looking at BYD is probably the stronger play. In fact, if you go to financials here, take a look at this. This is what I want to see comparative to Tesla. I want to see increasing revenues and increasing profits. That gives me confidence. And then I go to the seven, kind of put everything together there. That 4M, we're flirting there with 80, so that's pretty good. And the earnings, I expect those earnings to continue. So, yeah, they're the big threat around the world as we speak. I want to make sure we've got this added to, yep, 415. We're going to roll these up. I'll do one more stock. Anything else you guys want to take a look at? Otherwise, I'm going to go to dashboard and I'm just kind of skimming through here. Actually, let's go back here. I'm going to close this. I want to see Let's go to score. Top score changes. I want to see what it moved from and to. See if there's any big jumps. 47 up to 60. No, no, no. Nothing really too hot jumping out. 49 up to 60 here in Saudi Airlines Catering Company. Interesting. Okay. 57 to 66 in the CKI. I want to take a look at this. I think I've seen this logo one other place, Clark. All right, so they're based out of Canada. Let's take a look here. Venture capital firm specializing investments in the middle market, turnaround. I see bridge financing, recapitalization, buyout companies. Interesting. Okay. Finance company. Cool. Well, let's have a look. On sale, 66, 56 on the margin of safety, so just over that 50 mark. Share price is 22, relatively low entry price. And we see here 298% over the last 5 years. Very impressive. Let's go to financials, have a look. Seeing the revenues increase slowly. They were flat for a while. Interesting. EPS is increasing, looking good. And we don't have the estimates. That's okay. So we're probably going to get about a 4 or 5. We got a 5. Okay. All right, let's go ahead. We're going to rank order these. I'm not going to tell you what to buy or sell, but in my opinion, strongest to weakest. And what I'd like to do typically is sort by the 7. In most cases, I tend to align with those. And then let's sort by the 4M. Uber, yeah, I kind of like that 7 ranking best. So looking through the list, what do I like best? I like Tesla, I'm sorry, Netflix, the company. I do like a lot, of course, a user of the platform, but gosh, yeah, it is based on this is the weaker investment. Uber, I'm shocked, but if I'm looking at the list here, probably the strongest would be BYD, and then probably look at Uber as second place. Strongest to weakest, I'm going now. BYD, then Uber. Yeah, probably then Clark, then the Tel Aviv, then Netflix, and then Tesla I put at the end of the list. Just I look at them as the biggest risk because of the competition around the globe, especially BYD. But the dark horse here, you could say the hidden gem that kind of jumped out of nowhere is Uber. Years ago, we saw the news with this stock. Um, I think his name is Travis Kalanick. Could be wrong on that. It was actually on Hulu, and I think it moved to Netflix. It was with Joseph Gordon-Levitt, but Supercharged was the name about the Uber story. Really good insights on the misconduct within the company, you could say. I would have never touched the stock with a 10-foot pole, but wow, their new management is really hats off to them. They made improvements. Nice work. But yeah, that's my list. I would go BYD, Uber, then Clark, Tel Aviv Stock Exchange, then Netflix, then Tesla. So good stuff, guys. Thanks for the tips here or what stocks to look at. I always appreciate that. I wasn't thinking of going after BYD, but that's a good one to look at. Next steps from here, keep using Tykr, monitor those stocks or let Tykr do the monitoring for you, add stocks to your watch list. That's my favorite feature. And then feel free to join me in another webinar. I try to look at stocks people are looking at. You can go here to webinars, get you up to speed with the tool. Looks like the next one is next week on the 22nd. Of course, any questions offline, feel free to email invest@tykr.com. All right, we'll talk to you soon. We'll see you.